You just got to keep remembering that the greatest investors stay in it for the long run, and that's how you'll make your fortune. Hello my friends, this is Tony Talks Money. I'm here to teach you ways to achieve financial independence. I'd like to talk to you about why shares, in my opinion, are the best investment asset class, bar none. Now the reason for this is because when you think about it, when you're investing in shares, you're actually investing in companies, you're investing in businesses. These are called, in the UK, PLCs, public limited companies, or in America, they're corporations, aren't they? Now, the reason why this is the best place to invest your money is because when you think about it, what you're investing in, you're not actually investing in a business, you're investing in human ingenuity. And the great example of this is these giant tech companies in America. This great ingenuity is what you're investing in, and you can't beat that with any other asset class when you really think about it. Investing in human intellectual capital, it means it will always outperform every other asset class. Now, the thing to bear in mind, because there's a lot of scare stories in the mainstream media about shares, all the headlines when there's a crash. But this is all short term. What you've got to remember is this is a long-term investment. And I would say if you're going to invest in shares, you've got to be really looking at a time scale of a minimum of 10 years. Because during that period, there's going to be lots of ups and downs, lots of zigs and zags of your investment. It will rise and fall. And sometimes the falls are stomach churning. You can get a fall of, say, 30% in value, which happened at the start of the pandemic, for example. So you've got to be prepared to accept that in the short term, there will be big swings in value. But if you hold on for the long term and you're investing in the right companies, subject for another video, then you're unlikely to go far wrong. Now, let me give you a good example of this. Now, Amazon was only really hit the scenes about 25 years ago. During that 25 years, there's been 4 occasions when the Amazon share price has fallen by 50%. But the last time I checked, Amazon's share price in the last 25 years had risen over 3,000%. Now, how many people would have held on to those shares after a 50% fall? Very few, I imagine. Now, that's only one example. There are many other great businesses out there. So when it does come to investing, you've got to remember that shares are the best asset class, but it's not for the short term. If you're going to invest and then get panicky after a year or 6 months just because it's fallen and you're going to sell, you'll be making a huge mistake. History proves that they always recover. If you're investing in a great business, it doesn't matter what happens in the short term, because the short term is all driven by human emotion. And humans are emotional, and humans will get upset when share prices fall. That's quite natural. I own shares, but even I don't like it when the price goes down. Nobody does. But you just got to keep remembering that the greatest investors stay in it for the long run. And that's how you'll make your fortune. I recommend it to you. Thanks for watching my video. I hope you enjoyed it and got a lot out of it. Follow the links below, and don't forget to subscribe and share with your friends.